Well, the last few weeks have been a volatile time for the stock market.
Yeah, it's unsettled because fears of a recession, changing tariffs, and tech sector being a little bit shaky.
Joining us now with his financial insight, expert Gregory Ricks with Gregory Ricks and Associations. And thanks so much for stopping by. So when we're looking, there is a lot of concern, especially with older people nearing retirement, seeing their 401ks dropping dramatically in the last few weeks. Over a month, the S&P was down around 10% over the last month. So what's your advice for people right now? They're looking at the 401ks and maybe are just uncertain.
Be patient. If they're not working with an advisor, they probably should start now, because you need to have somebody that is a sounding board. So sometimes when you're on the ledge, they may need to talk you off. But you know, when you kind of say somebody, and I'll just use a reference of age 50, subtract that from 100 and that tells you about how much risk you should carry. So they shouldn't be full into the stock market. Maybe those are for 20-somethings and 30-somethings that can weather it and almost don't care what the market does. But when you get into your 50s, you start having some concern, and you should have diversification. 10% downturns happens on a regular basis. We've had some 56 of them since 1929, and 22 of them have become bear markets with just 20% or more. Honestly, I'd get excited about 20% down. I know it's going to be painful, but oh my gosh, it's rare and a buying opportunity because the market's going to move back up.
Investor sees that as a buying opportunity.
They absolutely do. You were talking about people in your 50s. That's where I am. And the advice I get is just what you said. Maybe not being fully invested, diversifying, and maybe backing off the aggressive part of that. Because aside from the professionals, I can't see, obviously you look at the stock market every day, see where the numbers are and that type of thing. But to try to play that every day seems like that would be difficult. That's why folks like you are in the business, to kind of calm those fears.
Two things you have to consider about this. We're talking about risk and that downturn, like, oh my gosh, it's going to impact me in retirement. You don't need to be taking income from an asset class that is volatile, or like stocks, for example. This 50% that's risk off is where income should be coming from, and allow the stock market, so to speak, room to grow. You kind of look any point in history, if you look back 20 years, go back 20 years and come back current, you're negative. You're never negative in the market at that point. So two things to reduce risk. Make sure you have enough time on that money that's exposed to risk, and then asset allocation. And inside allocation is more diversification, but allocation, so everything should not be exposed to stocks.
In the long term, it'll always play out. It seems to be the message there. And now let's talk about some reasons that we're seeing the volatility right now. We're hearing news about the tariffs every day. Exactly what that news is, it changes day to day. How big the tariffs are, if we're even going to have tariffs, that kind of thing. How is that playing into the stock market's dips and rises?
Well, the market is concerned about not knowing where the tariffs going up or going on, and all of a sudden, well, it's paused for 30 days. I'll define this. This is Trump's negotiation there. Is it going to cause some pain? Yes. But we need to get our economy back going. We've been living off the government spending for the past decade, especially the past 4 years. Look at what we've got, the national debt at $36 trillion, which leads also into Doge. Finding overspending and fraud, and that's not necessarily defined yet, but we've got to quit spending $1 trillion or $2 trillion a year. Imagine running your household that you're spending 20 to 30% more than you take in, and you just keep going to the bank and getting them to give you more every year. How long is that going to last? And how is it going to end? Not well. We as a country cannot hand this off to our kids. We're going to need to get some pain now for this to be better. And the tariffs, we need to shift business to coming back here. Is this going to be painful for a bit? Yes, but we need business. We need companies coming back here, producing here instead of us buying it elsewhere. And we've seen the pain from, say, China said, well, maybe we won't send you the pharmaceuticals this month.
Right, and you're seeing what's happening as a clear path to short-term pain, long-term growth. Are you seeing that right now?
Yeah, there's going to be short-term pain. We may see at the end of this quarter signaling that we might have negative number. The winter also plays into it, the California fires into it, and imports. A lot of imports shipped in this first quarter to get ahead of tariffs. So we could see a recession actually finally happen, which
has been talked about for what, 4 years?
For 4 years. I talked about it 4 years ago on a news appearance in Baton Rouge. I said, yeah, we could face that. But one of the things about a recession is it's going to clean up the problem companies. It's going to cause some companies that shouldn't be in business borrowing money to go away. It's part of the cleanup phase.
It's almost like the strong would survive, but the advice to people, I would imagine, is patience, not panic, because it's easy to panic when you see those numbers.
Yeah, and this isn't a time to bail or start selling off, and that's why you should have proper asset allocation. You should have risk-off money. You should have some money that adjusts to what's going on, and then, you know, we like buffers a lot that limit downside exposure. Now, there's caps on that for the upside, but we do want to limit that. And one thing I always think about is how people react, and we have to think about that. Me, there's not a big reaction, but my clients, they'll react, and I always consider how they feel about things.
All right, Gregory Ricks, great insight there with Gregory Ricks and Associates. Thanks for stopping by, and bottom line, just be patient with your money.
Be patient.
Okay.
Yes.
Thanks
Good
for stopping
advice
by.
there, definitely.